So we'll continue to break this down. Let's bring in my next guest. That's going to be Scott Bauer, CEO of Prosper Trading Academy. Scotty, what do you think of these numbers? Another upside surprise here for jobs.
Big surprise. I haven't seen if there have been any revisions though yet, because over the last several months, Tom, we've seen downward revisions from the big numbers that we have seen. So I haven't seen that yet. This is very surprising to me, the market reaction. We saw a big downtick as soon as the headline number came out here, but now it looks like the market's firming back up again. So I'm wondering what else is in there that we have not seen yet, or is the market taking this that, man, the economy is just still really good?
Yeah, I've got some other data points here. Average earnings on a month-over-month basis up 0.3%. That was expected, 4.1% year over year. So in line on those. Labor force participation, Scotty, that ticked up 62.7% versus forecast of about 62.6%. That's ticked up. Is that maybe why we're starting to see some firmness? Because I'm surprised with that headline number that futures aren't even down more.
I agree with you, and that must be it. And I'm also sensing that there's probably some revisions in there that we haven't seen yet. So we definitely have to break down these numbers. Do you have a chart up there of what the 10-year is doing right now? I haven't seen the reaction there again.
Yeah, 10 years up through 4.37% right now. That ticked
big
up.
Move.
We got a big sell-off here in Treasuries, so yields are up on that. What's your reaction there?
I mean, that's a big move. That coincides to me with the equity markets that they should be selling off. So the fact that the markets are firming up here, but yet we're seeing a sell-off in Treasuries and yields moving higher here, something doesn't make sense. So something is still, I think, not, we haven't seen the full report yet. So give it another 5-10 minutes or so. But this is not really what the market or the Fed wants to see, especially after yesterday. All day long, we got bombarded by all the Fed heads talking about, patience. We have to wait. Well, this data point certainly gives them more reason to wait and not have any sense of desperation at all to have to lower rates.
Yeah, you mentioned yields spiking on this. The dollar's spiking on it also, which typically creates some headwinds for equities too, but we're not seeing that. Best headline jobs print since May of 2023, Scotty. Lowest year over year hourly earnings growth since June of 2021. So maybe the market's taking hold of that the trend's going to keep going lower. I mean, it's still 4.1% growth year over year. That's inflationary, Scott, at this point. So when you look at data like that, it seems like, the market always wants to get those green shoots out of any data points that we have, but it still seems like they're holding on by their nails.
I think overall here, again, unless there's some data points that we haven't seen yet, overall, I think this is very bearish for the market. Yes, it's a good thing, right? We look at these data points and say, what's good is bad, what's bad is good. This is a good report economically. It's not what the market wants to see. It's not what the Fed wants to see. So unless the market decides, Tom, that okay, higher for longer really is okay here, I don't see how we sustain the levels that we're at.
Scott, stock futures are back to the levels before this number came out. It's just amazing to me at this. There was a small revision down from the previous month from 275,000 to 270,000 in the previous month.
Yeah,
that's kind of nothing burger on that one, but
exactly.
Pretty surprising that we're seeing the strength. Now we'll see if it holds. Maybe that big downturn that we saw in the market took care of maybe some of that that worry, that wall of worry that we have on a big headline number of 303,000 at this point. But Scott, I wanted to get your thoughts here on other asset classes, especially in the commodity space. I was just talking to Carly Garner. And she was saying the same thing. It's like the dollar's been disconnected because the dollar's been firm, but we're still seeing gold go to record highs, silver at 2-year highs, and copper at 1-year highs. I mean, what's your assessment here? Is this going to last?
Listen, Carly is the go-to, right? I mean, she is someone that you really want to listen to when you're talking about commodities. I think we're at a point here across the commodity space that we're due for a little bit of a rest. I'm not saying necessarily a big pullback, but you have seen hyper rises across the board, whether it's gold, whether it's oil, whether it's copper, just across the board. And I think that there's been a little bit too much euphoria behind the commodity space right now. I'm not saying that we can't go higher. I would look at this and say, boy, we are ready for a little bit of just a break here. Pick your asset class. So I'd be a little concerned there if I was long across the board in the commodity space. Peak in pricing here, boy, we've seen it here. The rally the rally in the metals. Look at silver and gold, obviously. So I think we're going to get a little bit of a rest here now that this jobs number is out. We've got some more eco data coming out next week. We've got a couple weeks or so until we start to see the big banks come out with the next earnings cycle. So I think we're in for a period of a little bit of calm, and there's probably not a lot of people that will agree with me with that, but I think the next couple of weeks we could see things calm down quite a bit.
Yeah, and I think maybe the bulls want to see that. I mean, you can't go up in perpetuity for equity markets. I mean, the S&P 500 was up over 10% in that first quarter, and that's on top of the gains that we saw in November and December also. So I think that might be the best thing for the bullish sentiment for equities is if we get some, maybe some consolidation here. But great breakdown for us, Scott. Have a great weekend.
You too, Tom.
All right, that's Scott Bauer, CEO of Prosper Trading Academy, breaking down that jobs data.